Welcome to today's market report. European stock markets are seen opening lower on Wednesday amid worries that recent surge in coronavirus cases throughout the region will halt the nascent economic recovery, even given the COVID-19 vaccine breakthroughs. The DAX futures traded 0.2% lower, CAC 40 dropped 0.4%, FTSE 100 fell 0.5%. Sentiment has weakened as the week has progressed, as investors returned to the basic concept that large sections of many economies throughout Europe remain closed as governments react to a second wave of the COVID-19 pandemic. On Tuesday, Scotland's First Minister Nicola Sturgeon announced that large areas of the country would shut all non-essential shops from Friday to combat a rise in cases, mostly in the west of the country. Equity markets had been given a boost on Monday when Moderna said its experimental COVID-19 vaccine was 94.5% effective in preventing infection, adding to Pfizer's promising trial data last week. However, an effective coronavirus vaccine will not fundamentally change European Central Bank economic projections, as a medical solution was already factored into forecasts, ECB President Lagarde told a Bloomberg event on Tuesday. Real GDP is projected to fall by 8% in 2020, according to the latest ECB staff projections, before rebounding by 5% in 2021 and by 3.2% in 2020. While the deployment of vaccines could occur more quickly than earlier thought, the economy was also taking a bigger hit from the second wave of the pandemic than expected. In corporate news, Richemont may be in focus after the Swiss luxury group said it plans to issue warrants as part of a shareholder loyalty scheme, following a cut to its dividend. Oil prices weakened in the US on Wednesday after a jump in country's inventories raised fears of a potential glut amid uncertainty over the output plans of the top producers for next year. Crude futures traded 0.2% lower at $41.38 per barrel. Brent rose 0.1% to $43.80 per barrel. Gold futures fell 0.3% to $1,879 per ounce. On the FX front, slightly better UK consumer inflation figures remained supportive. GBP USD keeps gains around 130.65 on the data release. The UK Consumer Price Index 12-month rate came in at plus 0.7% in October when compared to plus 0.5% booked in September, while beating expectations of 0.6% print, the UK ONS reported on Wednesday. Meanwhile, the core inflation gauge, excluding volatile food and energy items, arrived at plus 1.5% year-on-year last month versus plus 1.3% booked in September, while meeting the consensus forecast of plus 1.3%. Against the back of possible Brexit deal by the beginning of next week, the data continued underpinning the British pound. This comes amid a mildly softer tone surrounding the US dollar, which extended some additional support to the GBP-USD pair. A promising development in late-stage COVID-19 vaccine trials dented the greenback's relative safe haven status. This, along with concerns about the economic fallout from new coronavirus restrictions in several US states, kept the dollar bulls on the defense. Although it is reported there is a possible Brexit deal next week, it is worth noting that negotiators are not yet to find a compromise on key sticking points, including fisheries. Eurodollar has been shrugging off cautious words from central bankers and extending its gains. The pair is currently trading near 118.68, representing marginal gains on the day, having put in a low of 118.50 during the Asian session. Coronavirus headlines and speculation about the next stimulus boosts are eyed on Wednesday. A coronavirus vaccine is no game changer for forecasts, according to Lagarde. The ECB already incorporated immunization from the virus in 2021 as part of its outlook and remains worried about the current spread of the disease. Jerome Powell, chairman of the Fed, echoed her cautious words. Lagarde stated that additional stimulus is coming, while Powell only opened the door to a potential expansion. If the Fed proceeds with another boost, Eurodollar has no room to rise. Final Eurozone inflation figures for October will likely confirm the drop of 0.3% in the headline Consumer Price Index. U.S. building permits and housing starts are eyed in the U.S. on Wednesday. However, the focus is on the virus and the central banks. The dollar edged lower in early European trade on Wednesday, weighed by signs the surging virus is hitting the U.S. consumer, while the country's political scene remained divided. The dollar index was down 0.2% at 92.245. Dollar yen fell 0.3% to 103.91. This is today's market news. Thanks for listening. We'll see you next time.